Well, it seems the dollar just can't get a break. Bloomberg News, as reported, has learned that central bankers are snubbing the greenback, putting more of their foreign currency holdings in the euro and yen and not the dollar in the latest quarter. And joining me now to talk about the dollar weakness is Marvin Barth of Tenenbaum Capital Partners. And Marvin was formerly the chief economist for international affairs at the U.S. Treasury. Marvin, it's good to have you back and nice to see you this Monday morning.
Thank you, Betty. I'm glad to be here.
Okay, so this move, Marvin, by central bankers, I mean, we can only read, of course, into the data so much and not so much their mindset. But do you get the sense that central bankers now themselves are worried about using the dollar as reserve currency? Or are we jumping the gun?
I think we're perhaps jumping the gun here a little bit. One thing to remember about these data is that they do reflect changes in valuation as well. So when the dollar falls in value, of course it shows that currency holdings have gone up for other currencies. So that's one point. The second point is, look at the dollar's decline recently. Yes, it's at a relatively weak level on a historical basis, but the declines, particularly in the last few weeks, have not been extraordinary, and they actually have seemed to track interest rate differentials, which suggests that this is really more a fundamental move rather than some grand concern about the dollar's status as a reserve currency.
And so then following from that, Marvin, it would be that when the Fed starts raising interest rates again, and we're seeing more of these auctions and treasuries, that we'll see the dollar strengthen. That's sort of the view then?
Well, you know, obviously currencies are very, very complicated. They're affected by a lot of different things. But yes, I would expect that as the Fed does begin to hike interest rates, you would see a stronger dollar. If the Fed is hiking from a position of strength. Now, I don't think that's going to happen anytime soon. I think markets are getting a little bit too excited about this, and that the dollar is not going to strengthen in the near term on that basis.
Now, Marvin, you were at the Treasury, and as you know, Geithner has talked recently about the U.S. wanting a strong dollar. That's been their stance for many decades or many years. Should there be anything more that Geithner or Larry Summers or whoever else in the White House, should they be doing more to support the currency?
Well, at this point, there's not a lot more that they can do with respect to rhetoric. You know, you really can only tell people that it is the policy of the United States to have a strong dollar. There is always intervention as an option. I don't think they're there yet, and probably not going to be there for quite a while. As I said, if I were in their shoes, and I once was, I'd be looking at the pace of dollar declines, and frankly, the pace of dollar declines are not worrying, so I wouldn't expect intervention. The one thing that they can do to really support the dollar, I think, is be much more proactive about fiscal consolidation. You know, that's going to weigh on the economy in the meantime. It's going to mean lower interest rates from the Fed, which, as we just discussed, is going to weigh on the dollar in the near term, but it will alleviate a lot of people's concerns about the long-run sustainability of U.S. fiscal deficits, and that's really the concern that you would have about the dollar as a reserve currency.
Okay. All right, Marvin, good to talk with you about this, and certainly something we're watching for the next couple of hours. Marvin Barth of Tenenbaum Capital Partners.